one more minute. Also, for the newcomers, I would like to also share reminders that the sessions are being recorded for your information, and to be able to share it with participants that are not able to join today. And we will also upload it to different online platforms. So in the first part of today's agenda, I will again share with you our agenda. Just a second. Yes, so in the first part, today we started with keynote from Professor Georgi Kurlev, and can you see my screen now, by the way?
Well, it's kind of white for
Yes,
me, but
it's freeze maybe.
Interesting. Yes. I think there is a problem with the... Now, is it better?
yes, we see now.
Okay. So in the first part, we had a keynote from Professor Georgi Kurlev, and then we had a panel discussion where we had startup and investment perspectives, particularly on the intersection of impact measurement and management and impact investment, especially when it comes to impact enterprises and impact startups. And now in the rest of the program, we have very interesting sessions, starting now with workshop from Professor Burza Yaşar from Institute of Graduate Programs at TED University. And it will continue with sessions from Esade, ESSEC, and also Impact Hub. And these sessions focus particularly on social exchange programs research that have been conducted for a while, and sessions will also share key research results from the programs. I will stop share now and also, welcome Burza Hoca. Hello, Burza Hoca.
Thank you for the introduction. Do you hear me
we
well?
will have, yes, we hear you very well, and it's going to be an interesting session focusing on the new tool that has been developed, Access to Finance Decision Tree, as part of the research. I would like to give the word to you, and wishing you a great session.
Okay, do you see it as like full screen?
Yes, we can.
Okay, all right. Thank you. I would like to welcome everyone on board again. So we said it's a workshop, so I really appreciate your interventions, oral, or if you like, you can also write in the chat. And it doesn't have to be in English. You can also give comments in Turkish. As Semih already shared the information, this is part of our work. It's funded by the European Union, Erasmus+. The project is Social Exchange, and our partners are ESSEC Business School, Impact Hub, Munich Business School, Esade, and European Center for Social Finance. Some of our partners are also will be presenting today, and they're also in the room. And this is one part of the project, and we are developing a financing decision tree for social entrepreneurs. I'm saying we are developing because we are working on an interactive tool, online tool, so it will be published as well. And feedback is quite important because, social entrepreneurs support the institutions. You are in the practice part. We are part of that practice team as well. But the better the experience, especially from different parts of the world, the better the decision tree will be. The only thing is the decision tree, of course, cannot be quite immersed, because then it is very hard to kind of control and move around. So we wanted to kind of focus on the main themes, but still, if you think we miss some main themes, please either speak or write in the chat one more time. So let me continue. What was our purpose for this decision tree? I mean, you are all in this field, so we are very well aware that it's quite different from the traditional finance, and the financing options for social entrepreneurs sometimes may be quite difficult because of the dual focus that they have. They have to have like financial sustainability. At the meantime, they have this dual objective of reaching some impact goals, and it can be quite difficult to have them at the same time. And the other thing is that they have the stakeholder accountability. So they are not only responsible for the holders of the enterprise, but a lot of stakeholders are at stake. We see that in the traditional finance as well. It's no longer shareholder capitalism, but this focuses more in social enterprises. And again, with respect to these like success factors that they are supposed to be measuring, both the financial returns as well as kind of like social impact indicators, this is quite kind of like not fitting the traditional models as well. So that's another challenge. That's why we have this funding gap. And the thing is, like, traditional finance at the same time is finding social enterprises risky because of these dual goals. And yes, they have access to other kind of funding like grants, but they may not be enough for scaling. So that's kind of like the problem that they are having. And they may not be very familiar with all the other alternatives. So we are kind of developing this decision tree to kind of map up like the different alternatives. And there will be decision notes where they will be asked questions, and based on their answers, different alternatives will be listed on the decision tree. So in our decision tree, we identified like 4 main factors. So the questions will be like the enterprise's stage of development. The second one is the legal structure. The third one is respect to impact goals. And then we have the questions related to their revenue model. And then we have, of course, sub-factors, which will be kind of like the decision notes and the choices that they have under these factors. So when you are kind of like listening to this, listening to me, so please kind of anywhere. I mean, I wrote like anything else for a lot of slides, but in fact, I mean it in most of the slides. So please, if other things come to your mind, as I said, feel free to raise your hand or just input it in the chat. And the ultimate aim is that we are going to be having kind of like based on the context, social enterprises will be able to match kind of like what kind of financing that they are looking for, and which may fit them better with respect to their mission goals and their own business capabilities. Before we kind of like move on to the decision tree, it's quite important for the enterprises to ask some questions to themselves to understand their funding readiness. And this funding readiness is quite a traditional part of like for all the enterprises to kind of like question themselves and kind of assess where they are. So the first part will be, of course, to understand the impact that they are after. So they have to be very clear on their impact model. As we have seen in the first sessions with Semih and the panel, at the beginning, social enterprises may not really develop like social impact metrics, which is quite normal because impact measurement and management is a different level of capability set, and they may develop these on the journey. And most of the time, impact investors also help shape and kind of like measure the impact metrics as they go on. But I think the first two parts, as also the panelists said in the morning, they have to be very clear on kind of like at least the problem identification. So what they are trying to solve in terms of social or environmental problems. So they have to be very clear and be able to reflect that to the investors at least. And the second part is, of course, the impact logic. So the connection between their activities and outcomes, they have to be able to show. And this stakeholder validation of the problem and solution fit, like traditional entrepreneurs also have that, right? Whether what they are offering as a solution is really solving the problem the customer has. The same for social enterprises. But they have to have like beneficiary engagement. What they are trying to solve for the beneficiary is really the way the beneficiary wants it to be solved like. So the beneficiary engagement, of course, sometimes they may not have developed that a lot. Maybe they will be requiring for funding to also improve on that. So these are some of the questions that they have to ask. So they do not have to be ready for all these before they seek funding, of course. The second one is the financial model viability. So to have at least some realistic financial projections is quite important. And sometimes these projections may not be very realistic, meaning like we may see quite high growth numbers in the following years without any justification. So that would be a red flag. And they have to identify like the main costs, and then they have to have a good revenue mechanism. So if they are not able to show like a sustainability path, meaning that they will be dependent on grant funding all the time, that may also be kind of create difficulty to raise additional funds following up. And cash flow management capabilities, again, these are the capabilities we want to see in the future. And when we are talking about social enterprise, it's not only about like operational expenses to be able to match like grant disbursements with the time that they will be needing, the money, etc., is also kind of relevant. The third one is the organizational readiness. So we know that like not every legal structure is able to get the same funding. So in Turkey, what do we see is most of the time we see like foundations, and then we have the associations, and then we see the social enterprise company structures. In Europe and UK, we may see other different legal structures, and our partner ESSEC is investigating them. So based on the different structures, you will be able to access different types of funding. So you have to be aware of that. And then the second thing with respect to organization readiness is like the governance model. So not most, let me say, but some social enterprises are starting their journey based a lot on like volunteer activity. And with volunteer activities, sometimes the governance model comes a little bit late. When I say governance model, what I refer is like decision-making structures, processes, accountability mechanisms, like who is responsible for what. So when you are designing this governance model, you have to, again, take into consideration not only your business goals, there has to be accountability and governance for impact as well. And this have to be in balance as well. And again, you have to have like both financial management and impact measurement systems. So not either, you have to have both. And then regulatory compliance is another thing you have to be looking into. And the fourth you have to think about before looking for funding is kind of like your team capacity and the market positions. Like, do you have kind of like people who are going to be understanding like grant management, some expertise in that, financial modeling, investor relations, and like if, for example, granting really requires a lot of reporting, even like the writing of grants require a lot of expertise. So do you have like team quite capable of that? And do you have like access to experienced advisors for different fundraising experience? That will be also important. And of course, like understanding your beneficiary market, your target market, and who is out there, like how do you compete, how do you differentiate yourself from them is another thing you must be able to think. So the first factor, as I discussed before, would be based on like stage. So the first stage would be the ideation and concept stage, where the social enterprise here has an idea and hopefully with a promising social impact potential, but has not validated that yet. So the enterprise has to engage with the beneficiary, as I discussed, like understand whether the problem that they are solving, I mean, whether the solution that they have is really solving the problem of the beneficiary. And at this stage, of course, the funding need will not be a lot, maybe a small funding at the start to test these assumptions, and maybe some funding if it's a product-based social enterprise, a prototype for that. And the key decision point, the social enterprise we have input in the decision tree is what type of initial validation that they will need. So they can have a need for market validation. So this will be related to the customer discovery and like whether the product they have is really what the customer is looking for. And the second part, of course, will be related to the impact validation. So for the market validation, there we thought, of course, crowdfunding campaigns and crowdfunding platforms is a good place to kind of like test the consumer interest. And most of the time, like, I mean, these are open to social enterprises and of course traditional enterprises as well, rewards-based crowdfunding campaigns, and some most popular ones in the global world are Kickstarter and Indiegogo. And in Turkey, we have Fongogo. So if you are not familiar, you can just log into these platforms. How they work is that the entrepreneur is launching a campaign, a project, we say, and they are kind of like for a specified period of time, they set their goal, funding goal, and then they give rewards to people who support the campaign, the project. So this may be kind of like an early version of a product or service that they are saying. And this is a good way to kind of like understand the initial interest. Of course, some experience and being able to use social media well to kind of disseminate this campaign is also important. And what else? Of course, government and foundation grants at this time are also options like Horizon, EIT, Erasmus. In Turkey, we have like COSGAP, TÜBİTAK, and some technology transfer offices of universities are also providing these grants for at least the initial phase. And then you have, of course, incubation programs. Social innovation centers and programs of universities are also there. And these also help support funding for impact validation as well. And for impact validation, again, some foundations and family offices have like specific grants for specific sectors. So be kind of like watching them out. Sabancı Koç, of course, in Turkey, UNDP, Robert Bosch, I mean, these are some names. I'm just listing them as kind of e.g. This is not, of course, a comprehensive list at all. And then you may have like government agencies, government development agencies as well. They are giving funding. And you may also be looking into like social innovation fellowships, like Ecoing, Ashoka, Akumen. They are providing funding at this stage as well. Whatever they provide, I mean, most critical is they're also providing network access, and that network access is quite valuable for getting follow-up funding as well as for scaling. So please write in the chat your comments, your questions, any follow-up as well during this time. And the second key decision point would be like how much personal, financial, or reputational risk you can assume. So this is quite important. I just did not say, like we did not just say financial. reputational here as well, because that's also important from the social enterprises point of view. So if you have high risk tolerance, you may go for more investment from like angel investors, your family, friends, and then you can also use your own personal savings. This may be lifetime savings as well. You may also get personal credit entrepreneur loans at this time. So that there is an entrepreneur loan, in fact. But if you are showing low risk tolerance, so at this time you don't want to either risk your capital or your reputation, you may do this social enterprise development, venture development, while continuing your current employment. That's would be taking low risk and going into more partnerships with universities, corporations, economic development agencies. But this is like in-kind resource, so they would be, of course, providing like mentorship, an office space, training, access to their networks, and so on. So that's another alternative. And another thing is like you can also apply for programs like you may have heard, of course, in Europe, we have social impact awards. So they are again providing funding as well as all the other training, mentorship, and technical support as well. And at the beginning, you may also use a lot of volunteer-based, of course, employment type. And while you are forming your team, you can continue with kind of like a promise for future equity, as that they will be becoming also owners of the company instead of like monetary compensation at the beginning. And of course, impact subs are also quite important at this stage and the follow-up stages. So the key decision point in the stage 1 again is what is your ideal time to proof of concept. So you may have an urgent need, so the timing is quite relevant when you are looking for funds as well. If you have an urgent need, that will be maybe 0 to 6 months. You may be looking for more accelerator type of programs. But if your need is longer term, like medium term, 6 to 18 months, you may be looking for longer incubation programs. So these are some of the examples we have noted, like Girişim Fabrikası in Turkey, Accelerate 2030, TÜBİTAK 1004 innovation competitions and accelerator programs. These may be providing you the immediate funding, as well as we have like corporate innovation challenge prizes. Some of the examples are like Borusan, Abdi Ibrahim, Ibrahim Bodur award programs, and then you have like hackathon competitions. So these competitions are also providing funding for your proof of concept. But if you are looking for longer terms, you will be looking to maybe longer incubation programs. And another alternative, of course, would be like foundation and government grants, again with milestone-based disbursement. So they'll be giving you grants at the beginning, but the follow-up money raisal will be based on like your achievements. So that's another option. Patient investors, that's another option. Patient investments, remember, these are longer time investments, so they are not expecting any returns before like 5 to 10 years. Government development agencies, corporate social innovation partnerships, guarantee partners, QNB, Finansbank Innovation Labs, Microsoft AI for Good, Coca-Cola 5x20. These are, again, other partnerships you may be looking for. And the important thing with the corporate partnerships is, again, that they are not only providing funding, but you are gaining, in fact, access to a lot of resources, which is very valuable. Like when you are thinking about Coca-Cola and so on, at that time, you're gaining access to their distribution channels, the marketing team, a lot of different kind of like experience that they may share with you, which is quite valuable. So the second stage would be the stage 2, where you are at early validation startup stage.
Burza hocam, maybe
Yes.
as you ask for comments, I shared the comment in the chat. Shall I
Yes, yes. I mean, I'm just
I-
following up. I don't see the chat, so why don't you?
I'm gonna do it for you.
Okay.
Ayşe is here, so maybe she wants to share comment.
Uh-huh.
As you ask for comments.
It'll give you a
Yeah.
break too from your long talk.
Yeah, Ayşe, your valuable comments. Thank you.
No, I just wanted to add, I think it's an interesting mechanism that is a difficult one, but I think very effective when it's applied the right way. Is if you go back to the medium term list, I think this can fall into the medium term list, the system of venture building. So some funds globally, I'm not sure if there are impact funds. There was one impact fund, and that has been quite successful in the technology realm, is they invest in the company quite early on, and they also build the product or service together. So that way, the fund shares all its resources together with all of its investees. So investees actually save money from, let's say, accounting needs or any other resources that can be shared across startups. But also, whenever there's a specific need of business development or product development within the investees of this venture building fund, then they can help out. The fund managers can help out the teams as well. And so I think it's quite a difficult model for the operational sense, but I think for startups, it's a great community to be in, and there's so much shared resource that they can actually grow their business much quickly. I just wanted to add that.
Thank you, Ayşe.
Sorry. Thank you, Ayşe.
Yeah.
Thank you very much. That was a valuable contribution. Any other comments? Maybe this we can take a kind of like couple of questions or comments at this time as we stopped, or okay. So I'm kind of like running out of time as well, 50 minutes. So most probably I'm not going to be able to finish the decision tree. So Semih, you can just stop me because there will be other sessions. Okay.
We can maybe like have 10 more minutes. Shall we go for questions, or shall we go on with the presentation? However you prefer, it's fine for me.
Okay, I mean, if there are comments, we can listen now, or I'll just continue with the stages.
Yeah.
Okay, I'm returning to.
Yes.
Okay. Do you see my?
We see it, but like not as a full screen.
Okay. Okay.
Yes. Now. Okay. Yeah.
So we continue with the stages. So the second stage is the early validation. So here at this stage, you have a working product or service, and you have some market and impact validation, and you just want to continue. And this is a challenging phase, in fact, because you are, in fact, maybe you have already collected some grants and you want to continue, but at this time, grants would not be enough. But then you are not at a stage to kind of like show your full potential, probably, and you're not able to get like large scale investment. So this is, as I said, a little bit challenging stage. And at this stage, we have the decision point. The question that we are asking is, of course, your legal structure, because as we discussed at the beginning, the legal structure really determines like what type of funds you can apply for. Like if you are a nonprofit charity, you are easy more kind of like to apply, of course, for grants. But on the other hand, you are not allowed like commercial activities. So there are like quite a trade-offs, as a lot of us are aware in this room. So for the nonprofit charity, of course, like grants, government contracts, especially for social service contracts, those are quite the options. And individual donor campaigns. So at the beginning, I discussed like reward-based campaigns in crowdfunding platforms. Of course, the other types are equity and donor campaigns. And this is quite an option for social enterprises as well, because the usage of these platforms increased, especially after the pandemic. So a lot of people are more aware of what's going on in these platforms. GoFundMe, First Giving, and these are like some of the most popular donor-based campaigns, but we have others as well. So these are options, please use them. The other, of course, the option is corporate social responsibility or programs of companies. There are lots of programs these companies are extending, and you can really do partnerships with the companies in that respect. In Turkey, we have a lot of programs from like British Council, Goethe Institute, and so on. So if you are in, for example, cultural and educational initiatives, these are alternatives. And as we discussed before, partnering with academic institutions and social innovation centers do have funding, as well as all the in-kind resources that we have discussed before. But if you are a profit social enterprise, and I'll be also discussing the hybrid structures, the options are a little bit higher, as you can have access to social impact angel investor networks. You can have, again, in-kind support from accelerators. We have TÜBİTAK 1812, and you can get like up to 900,000 Turkish euros. And in exchange for also, they are getting 3% equity now. You can go for early stage impact venture capital. Convertible notes are quite popular. What are convertible notes? I put kind of like notes on my slides as well. Those type of explanations will be in the white decision tree, interactive decision tree, because sometimes the interactions may require extra knowledge on your side. So we will be inputting like 1 or 2 sentence definitions as I shared here, and maybe one example to kind of like make the social enterprise more acquainted in case they do not know. For example, convertible notes. What is convertible notes? These are in fact debt instruments, but these debt instruments are converted to equity at future funding rounds. So what is the advantage of these? They are kind of like protecting the social enterprise from immediate equity dilution. So you are not kind of like promising equity at the time where your valuation is not really clear. So you are in a way deferring the valuation to later times, which is good because you will have kind of like, you have shown yourself better. Most probably you will reach higher valuations, and that will be more favorable to you as a social enterprise. And the other option is revenue-based financing. This is quite also used by social enterprises. The thing is, again, you are not kind of like giving up equity. You are not giving up ownership. You are just kind of like sharing your revenue every month, and this may differ. Some average rates are 2 to 8% of the monthly gross revenue, and the investor will be collecting part of your revenues until they retire their initial investment. But the thing is, like, you can only use this type of financing if you are kind of like having a recurring revenue stream. So most of the time, I mean, if you have like membership fees that you're collecting, so this really works well with subscription-based revenue models. This is where you really can use that. What else? Community development financial institution loans are an option. COSGAP always has loans for small business loans. And of course, the advantage is that they are lower interest. And a lot of foundations and other investment companies have specific focuses and gender focuses, minority focuses, gender lens programs. These may be options. So if you fit in, it's good to kind of like discover these as well. And as we discussed crowdfunding before, another type of crowdfunding is equity crowdfunding. So in essence, not now, I mean, it's been there for the last decade. you're not only becoming an equity holder through the stock exchanges, you can list yourselves in platforms and become shareholders of companies. So do look out in those crowdfunding campaigns as well, because there are lots of different social enterprises there. And the third model is the hybrid model, where you kind of like have both a non-profit part and the for-profit part. So that's to your advantage. It may be to your advantage, as you can apply to both of these types of funds I already discussed. And you can also have some kind of like creating synergies, because you have these two types. For example, you can have like cross-entity funding strategies, which means you are getting the grants to nonprofit, and then you are kind of like giving these, you can also apply for equity for the profit part, and you can also get like service agreements for, let's say you get funding, grant funding for your nonprofit, so you can kind of like give that contract to your profit entity, so, and creating an income stream for that. So these are different types of funding you may apply for. And as we discussed at the panel, there are also kind of like blended finance arrangements, like combining philanthropic grants, concessionary and commercial investments. But these are kind of like quite for big projects like renewable energy, healthcare, and education. And we have like different types of funding for different types of risks. So for example, philanthropic grants are there so that they are taking the first loss in case of any risk, so that they'll be able to kind of like gear the commercial investments, the investors, to also enter the deal. And concessionary capital is capital where they are willing to accept like below market rates, so they are more in for impact. And the decision points, key decision point 2.2 is your revenue model. So revenue model is also quite very important, because it will also affect like the different types of funding you may be looking for. So if you have direct market-based revenue, meaning you have some products or services and you sell it in the market, these are some of the different funding options for you. The first part is working capital loans. These are quite traditional, and I mean, a lot of traditional entrepreneurs are also using that. What are these? So let's say you have some contracts, but the time that you are starting your operations and the time that you're receiving the payment from the contract, there's a lapse. So to kind of like close that lapse, you can apply for working capital loans. The second type is inventory financing. So again, this is for product-based enterprises. So if you have like inventory, finished goods that you have in your storage, this can act as collateral for you to apply for traditional bank loans. What else? Purchase order financing. And this is for especially like large corporate or government contracts. And again, you have a contract, let's say, from the government, but till the contract payment you receive, you have to have like expenses. This is again an option for you. Or you are into production, you want to increase your capacity, you are going to be acquiring, purchasing equipment, machinery. You can again apply for loans, or getting leases is another option for you. Again, another traditional type of funding social enterprises still can use if they have a market-based revenue is factoring or accounts receivable financing. So what is going on is that you have accounts receivable, but there's due time and you need the money now, so you can sell the accounts receivable, let's say, at a discount and collect it now. What else? You can, of course, get anytime trade credit from suppliers, and strategic corporate partnerships is another alternative you can have. Endeavor Connect is a program where they kind of like connect. This is both for impact enterprises as well as traditional enterprises. They kind of like connect startups but mainly like technology and R&D startups. The second model in terms of primary revenue, I think I have 5 minutes, so I'm going to be, I think, wrapping up with stage 2 at this stage. The third-party payer model. So in this model, someone else pays for the beneficiary. So in that model, of course, social impact bonds are the first type of, or we call them like pay for success contracts, the first type of financing mechanism that comes to our mind. Maybe some of you are already familiar with these types. This is like the investor takes on the risk of whether you cannot, the risk of you not reaching the outcomes that you promised. So most of the time, governments or municipalities are getting into these types of bonds. One famous example is one of the first bonds as well, is related to youth recidivism. So you want to, the municipalities, the governments want to decrease the rate of kind of getting into criminal behavior, consistently entering the jail. They want to decrease. So if you are getting into the service, the investor takes on the risk and you are paid only if you're successful to decrease this recidivism rate. So if you are not successful, the government does not pay and the risk is with the investor. What other models you can have, like corporate sponsorships? So we have like Unilever Sustainable Living Plan, IKEA Social Entrepreneurship. So a lot of different programs that you can look into. What else you can do? You can have like different pricing structures. That's another option. So you may charge like different prices for different beneficiary segments, or you can price like high price for one payable sector and then lower price for the other sector. Or you can have like cross subsidy models. So you can have like revenue from higher paying consumers, and then those may be kind of like subsidizing the lower income beneficiaries so that they don't pay anyone. So those are the different models that you can test with. And the third one is, of course, if you are not really have worked on a revenue model and more kind of like dependent on donation or grants, because the market that you are after is not able to kind of like pay, or the third party, there's no third party as well. This be more, of course, financed by grants, donors, and strategic corporate partnerships. Yes, Semih, I know I'm out of time, but I just don't want to kind of like continue and get maybe more questions at this stage.
Sure.
Or comments.
Sure, definitely. I mean, I was just gonna add a comment. Maybe I can share about this stage 2. I think seeing revenue model as a decision point is very important, and I observe that it is often overlooked when it comes to enterprises. Like in our experience is that like tendency is to look sometimes to look for investment or financing even before the market or customer, but it should be the other way around. I think revenue model and customer should come first, and then investor or financing, when you do that good, investor and financing follows in general, or like there are many examples of enterprises that are successful without investment, but no examples of startups that are successful without customers. So I think that revenue model angle, I really like that as a decision point, and it is particularly, I think, important for enterprises that are maybe not so suitable for conventional venture capital kind of investment. And we have a lot of those ventures, for instance, local producers, like sometimes like rural enterprises. I mean, these are in general not addressable by conventional investment, but using this tool that you shared on that part, I think they can access finances in different ways. So investors are not the only option. In that sense, I find that part very important.
Okay, thank you. So let me just show kind of like the headlines because I'm out of time, but we continue with kind of like the primary scaling approach. So one node is geographic expansion, and then we have listed kind of funding for the geographic expansion. And then let me do it full screen. Okay. And then we have the impact depth, increasing depth or quality of impact, again as a scaling approach. And the third scaling approach is reaching new beneficiary segments. And then we have funding alternatives for that. And another decision point we have in stage 3 is the level of control and governance autonomy the enterprise wishes to maintain. Because if they really want to continue with the high control, that means they will not be really going after like equity investments. In terms of equity investments, most probably the only one that they will prefer is preferred equity, where you have like the financial preferences first, like they have to get the first dividends, and in terms of liquidation, again, the first access to funds, but they don't have a lot of control rights, so they don't have like voting rights and so on. So we have that distinction in terms of like whether the enterprise is after like high control or they can just go after like strategic partnership, or in other terms, they are okay to kind of like share control. So that's another decision point for them, because that will impact, again, the funding choice. And the third option for that is like financial self-sufficiency. So whether in the future they just want to continue by themselves, and in that respect, then they will be working to improve their kind of like financial reserves, or they will be kind of like investing in assets which, besides their commercial revenues, that will generate like real estate or investment portfolios that will generate kind of continuous funds for the social enterprise. And of course, options for mixed revenue type as well. And then we continue with stage 4, the mature one, where we kind of think also the enterprise will be planning for exit, acquisition, or like transition planning, where they'll be kind of like transferring the ownership to maybe the managers, the employees, and so on. So that's kind of like the summary of our decision 3. The
Yes.
diagram, we have kind of like one, but it was very complex to kind of, and a big one to share on screen. So that's why we did not show the diagram, but we are going to be making it online, where that with the software, so that people will be able to kind of like pick the decision and move on. So it will be more kind of like, rather than a diagram, an interactive tool. Let's see if we can do that. Ayşe. Thank
That
you.
sounds great. Like once
you.
that is online, we can also share it with participants.
Yes, thank you very much.
Thank you very much, Burcu Hocam. We will now move on to the next session with Dalia Silberstein, Director of Esade Center for Social Impact. And the session will focus on measuring. The title of the session is Measuring What Matters, from Proving Impact to Improving Practice. Impact as a Learning Journey. And we had emphasis on this topic a couple of times today, and also in the keynote part. So it will be really interesting to delve deeper into it. Hello, Dalia. Welcome. Great to see you.
Hi, hello. Thank you. Thank you for this space. And yeah, hi everyone. And I will be sharing my presentation. And yeah, let me know if you can, please, if you can see it. Yeah.
Just to make it full screen would be great. Like.
Yeah, it's not full now. You don't see it.
Like we see the PowerPoint six, but I think it's visible. Yeah.
Let me see. I will try again.
Yeah, sure.
Windows.
Yes.
Yes.
Yes.
Okay.
It's better now.
Okay. Yeah. So hello everyone. I'm Dalia Silverstein, and I'm the manager of the Esade Center for Social Impact. It's a pleasure to be here. I will first of all give an intro, a very brief intro about the center. Just a second. So you see now only my presentation?
Yes, we see that it changes now. Yeah.
Okay, excellent.
Yeah.
Yeah, so very briefly about where I work, which is the Esade Center for Social Impact. We are based in Barcelona. It's a think tank, academic think tank. We do research on relevance themes, mainly focus on impact entrepreneurship, impact investing, gender lens investing, and impact measurement and management, systemic impact, many things related to impact. So yeah, so we are happy to be part of this project that I'm sure that you heard before about the social exchange, where we learned a lot from different social enterprise, plus all the knowledge that we've been, from learning from other research on these topics. So why do we speak about impact in measurement and management? Because measurement should not be a burden. It should not be only for reporting, but mainly for a learning journey to maximize your impact. And we will understand what we are talking about. This is like the brief of the agenda. But first of all, let's focus on what is impact, right? Because we might be thinking of different things, and today, we can be making a lot of confusion with sustainability, ESG, many things. So what is impact? Or at least, for us, which operational definition we are using. So for us, impact is the positive or negative changes experienced by people or the planet as a result of one or a series of activities. What is maybe different from sustainability, that sustainability is more focused on this balance among environmental, social, economic, and this balance, which is also considering the negative impact on not making any harm to the planet or society, while impact is more related to change, right? Sorry. So if it is related to change, we need to measure that change, and we need to understand what do we do with that knowledge from that change, right? So it's not only to measure, which refers to, that to understand, to measure the effects, the impact through various methods and approaches, but also to manage that knowledge so that it includes all these process, culture, capabilities that enable an organization or as a person to really manage and optimize that impact that we want to happen and we want to have as an organization. Okay, so So when you manage the impact, you really use that data. I mean, you are not only collecting data and information and knowledge to report, but mainly to improve, okay, to understand and to be able to make decisions per that knowledge that you collected, that you learned. Okay, so just some of the background of this, no? So let me give you like a familiar example scenario. Let's say that we want to improve the girls' education situation in Afghanistan. So we build new schools, okay? But how do I know, and how do you know that we actually did that change happen through building schools, okay? Which is a very concrete action, but still, you know, it's very subjective to understand if it is really that made the change happen. So was it our actions that made the difference? This is where I&M comes in, no? To measure and manage towards outcomes that matters, okay, that you want to understand. And it's not only assumptions. I mean, you use your assumptions, but you need to prove it to improve the change and to actually understand if it is through your activities that you are actually making that happen, that change that you are aiming happening. Okay, so like, why we measure impact and who is measuring impact and why, and for that. So why do we do this? So for founders, for investors, might be different, no? It's about making smarter investment that, of course, for impact investors are related to impact as well. You know, that will depend on the level of involvement in the and the focus in the impact versus profit. So it will be maybe more on the side of the impact first, which is more focused on and caring about the impact purely. And then the other extreme, and you have like, you know, different kind of investors that are more interested in or more focused on the impact and less. But mainly, they want to make a good investment decision, right? To maximize the use of those resources. So it's really about reporting, no? The reporting is very important for investors. And they evaluate to what extent desired social impact is really being achieved. So they monitor that, whether the investee is improving or not. Okay. While for social enterprises, it's about knowing if they are making real difference and improving. It's not just about like proving impact for report, but it's about learning how to do it better. Okay. And some of our like learnings out of all this research, a few core, and then I will share more about specifically the social exchange research. So first of all, to give you like recommendations, don't start with data, okay? Because it's very typical that, you know, entrepreneurs and usually all of us, you know, start collecting all the information and everything. So don't start from data, start with clear goals, with objectives. What do we need to aim? And then we will really select, and we will talk about that, the indicators, the data that you really need, the relevant data. Then it's very important to engage with stakeholders. You cannot measure and manage to make decisions alone or only the team of your organization, but you really need, of course, the voice of the beneficiaries, their involvement, their voice, and the other stakeholders, because there are many stakeholders. So first of all, and we will speak about that as well, you need to identify who are your direct and indirect stakeholders, and you need to be involved. They need to be involved and engaged in this I&M process. You need to co-create the indicators that are useful for decision-making, not just for founders, which is also something typically, and I will maybe insist on this, right? On the reporting, on the measure to prove, measure to report. So it's really about useful indicators and information for decision making. Okay, so then there are several frameworks. We use the EBPA, which is today the Impact Europe network, which is actually the 5 steps framework. I don't know if you are familiar with it, but this is the framework, and we will go through every step of these 5 steps that you need to go through in order to measure and manage your impact. So first of all, you need to define your impact objective, which we said before, not to go immediately to look for and collect data, but to really define and understand your objectives. And we are using, you can use other tools, but one tool that is really well used is the theory of change, and we will talk about that. So first of all, define your impact objectives. Where do you want to go? What is about the change that you want to make? Then, and we mentioned before, identify your stakeholders. Then measure results. Measure what matters. Measure, what is related to your relevant indicators. Fourth, verify and value your impact. You need to all the time, go through a verification and validation of what you are measuring, because that can be changed many times. That's why it's not a linear process, right? Then monitor and report. Of course, we are not avoiding the report, but the report is part of this learning process. Okay, this is like a practical, flexible, and helps organization to integrate this IMM process into the operations, into the strategy, and not just reporting linear cycles. So maybe now going to this theory of change that I mentioned before, many could be familiar with this process of the theory of change. That is, it's a theory because there's a lot of assumptions before the process that we do that, and we have hypotheses, and what we want is to change, and we need to track this and go through all this process. So it's a framework that it's really good as an approach and tool to measure and manage the impact. So in relation to the role of the impact investor and the social entrepreneur, something that we know is that the social entrepreneur is making like a direct impact to the beneficiaries that they want to make a change, and then impact investors are like indirect impact through their investment to the social enterprises, right? So a central tool to define this, as I mentioned before, is the theory of change. It like kind of maps out your reasoning behind all this process. So from the problem to actions to impact. Also makes your assumption explicit. I mean, we all have assumptions when we think about how to improve something, and mainly in the social complex challenges, which is even more complicated, right? So it's important to go through all these assumptions that usually we have. So we'll work to work on the theory of change. We usually use what it's called the problem tree. And what is this problem tree? As the tree has roots, the trunk, and the branches. So the core of the problem is the trunk, the center of the middle of the tree, and then the roots are the causes of the problem, and the branches are all the effects and consequences of that problem, right? It can be also symptoms of that problem. So we really need to kind of try to reflect our problem into this kind of tree structure, where we understand what are the causes of the problem that we want to tackle, and which is like the core of the problem, and what are the different effects of the problem, right? This is an example that I will leave in the presentation, and I'm sure we will share the presentation. But this is an example of unemployment and different reasons for that. I will not go into each because we will not have time, and the different effects. And this in red is, high youth unemployment, which is the core problem. And then what we do as a social entrepreneur, for instance, is to focus on these two causes, or this cause that is related to other variable, okay? It's very ambitious as a social entrepreneur to be able to tackle the entire complex problem. For that, now we are speaking a lot about systemic impact, which is not me alone as a social entrepreneur, but articulated with different sectors and different actors. We can tackle systemically through really tackling the different causes of the problem. But usually we choose to tackle the problem through specific causes. And also, even though, many times, even though we are tackling that and really focusing on one cause, each cause, as you can imagine, in the social complexity, has a lot of other effects, positive effects, like a domino chain that can happen, kind of multiply the impact that you want to make. Okay, so you pick the root causes. Okay, this is the example that then you can review, and then you understand what is the aim, the goal for you of the change that you want to make, and you think we'll see it very soon about the outcomes and outputs, and you will check the activities that you will need to do in order to get to these goals. Okay, so this is the famous theory of change, where you can check in this very clear example about the goals, the outcomes, short and long term, and the outputs and the activities. And I will explain about this. So this is the framework. Okay, so what you do is that you start with the problem that we work on the problem tree, where you state what is the problem that you will tackle, right? So we start from there. And then you formulate it in a positive way. So the problem is negative. For instance, lack of jobs for youth, like unemployment. And then what is your mission and the impact that you want to make? So it's in a positive way that you want to say, okay? So it's the long-term consequences of your objective for the change to happen. Then the outcomes is what is the change in the problem? Which change do you need it to in order to go to get to the objective that you want to aim? It's more of a short and medium term. Then the outputs is what are the expected outputs in terms of volume of products or services. Usually it's more number of, we will see example, but number of people that attended my training program, for instance, how many sessions I deliver. So it's very concrete, very clear. And then we have the activities, which is the training programs, right? For instance, in the example I just said. So it's all the activities undertaken to produce the outputs, actions, verbs, sell, design, advise, coordinate. Okay, so what do you do and what do you need to do in order to get those changes happen, in order to achieve your main goal? And then you have the resources that you will need in order to have those activities. So it's resources used to undertake the activities. Could be human resources, technology, financial, you name it. And then there are, as I mentioned before, assumptions, right? In your theory, we usually think that if we do this, then the people there in that community will behave in this or X or Y way. So this is our assumptions that through all this process and through all this data that you will collect, through interview surveys or whatever, you will get really the information through a good selection of indicators that will make you understand if that assumption is true or not, or what can you tell me about that assumption that you had before. Okay, and then we have assumptions. I said, and here you have some examples. Okay, and this is another also the framework of the theory of change template. So as you can see, you have for one ultimate goal, which is the impact and the long-term change that you want to make, you can have many outcomes because it's like a series of changes that you need to aim. And then there is the evidence assumption in order for that. Because as I said before, how do you know that if I build more schools in Afghanistan, then the education for girls will improve? Okay, so from the activity that they do and the outcomes, there are assumptions, right? And then the activity and the resources that will enable the activities to happen. Okay, so then let's say focus like an analogy to how to prepare a cake, right? So for the cake, you have the ingredients, which is like the inputs or the resources that you need. Then you have all the recipe, and you are going to measure quantities of ingredients, and you are going to follow, you are going to do activity. You are going to cook, and you are going to heat, or you are going to mix. So all of that you are doing, which are the activities, and then the output is that I have a cake that will be good for 10 people, okay? So this is very concrete. My cake, it's like the size of my cake will be for 10 people. But then the outcome is not only, how many pieces, it's really actually what is the change that you did with that action and without output. So it will be 10 people are now happy and full because they ate their piece of cake. Which is, again, it's difficult because it could be very subjective. So for that, you will need to go through a lot of maybe qualitative kind of process of research, with the survey. I mean, not in the example of the cakes, but in general, because we are doing an analogy. So if, again, for instance, for a project, you have the time, you have the resources, let's say project in training for education. You have resources of the books, the human resources, then you will deliver the training, which is the activity. Then you have 10 people who received that training. This is very clear. But then it's 10 people more confident, happy, healthy, or whatever that is more related to the training that I'm given. Okay, this is another example. I put different examples, which I will not have time to go through, but you can then check those examples here. Sorry. Okay, so then usually it's difficult. I acknowledge that it's difficult to understand the difference between outcomes and impact. And mainly when we hear it can be very easily, but then when you really work on the theory of change of an organization, it's kind of not clear or confusing or difficult to really define each, okay? So then to move from outcomes measured to understand really if the organization is having an impact, we have different factors to consider. So first of all, it's called the drop-off, which relates to the fact that over time, the importance of impact decreases It's like, if I make a change, I cannot expect that that change may last forever. So that's another, I'm now mentioning things that we need to consider in our assumptions and the outcomes and the impact, okay? Like this. So the organization should be aware of which beneficiaries are dropping off and if they are commonalities among them, so like to be able to improve the services, okay? So it's something that that's why also a report is not enough. You need to continue learning and understanding. Then another concept is the displacement, which relates to the fact that with some interventions, the positive effect that is seen in a certain group can be different in another group. Okay, so maybe in another group, the same training, let's say, went really bad or had a negative effect, and in another one, like a control group, a good effect. So this is also to consider. Then the dead weight, which is the consideration of what would have happened anyway, right? In the absence of my activity or my organization. So that includes like the progress that beneficiaries would have made without the organization's activities, right? So what would happen without my intervention? Then the attribution, which is more related to understanding how much of that change that I can understand, and it's a concrete change that has observed, is the result of my actions, the organization's activity. Because might be the situation that many actors are involved in, like the government or other programs or other trainings. So how do I know that this is attributed to my intervention? Then the next step, which is the second step, is analyzing the stakeholders that I mentioned before. Is who are my primary and secondary stakeholders, which is like the indirect or direct stakeholders. What are their expectations? When and how they will be involved, or I want them to be involved. So this also influences what I measure and how useful the data should be, for the different stakeholders. Okay, here you also have an example for you to really analyze on an example of the stakeholder in a specific organization. Then step 3 is measuring the results. So this step is about selecting the right, as we said before, the right indicators, not all the indicators and not all the data, but really about not collecting everything, but choosing what really helps me to improve my organization's impact. Okay, so it's better to keep it short and simple to reduce the reporting also burden, for both for investors and for you as an investee. So also don't reinvent the wheel. Choose indicators from available databases where possible and feasible. There's no like a benchmarking, and it's a new issue but you can mix between what exists, and you can see that others in the same vertical sector are using, and also some that are super specific to your organization. Okay, so this is clear. You cannot measure everything, and it's not useful, and it's not, it's a lot of effort. So you really need to focus. Okay, even sometimes 2 or 3 indicators per objective are required and are fine, and you don't need to work more on that. Okay, this example I already went through, but you can, really go through it's again the cake example, but also adding some more information related to the indicators and the data collection. And here you have another example of reach for change, which is super interesting. And then relates to the step 4, which is verifying and valuing impact. No, so how now it really happened and if it matters. So that's why you verify and value the impact, no, using different methods like interviews, focus groups, and in some cases, financial proxies. So you need to kind of design the research that you will do in order to validate all of this. And then we have the step 5, monitoring and reporting, no? And this is finally how to use what you learn, collect data, yes, but also to use it. So how many decisions did we make? So not only to report the data, but how, you know, like an introspection of how the decisions were taken, if really you used the data for your decisions in order to make better or to improve the impact that you want to make. Okay, so again, this is the framework, but maybe now you can see it as a whole, no? So just like as a backup to really define the impact objectives, to understand your stakeholders and involve them in the process, to measure results are relevant, to verify and value the impact, and then to monitor and report. And this is not linear, so then you will need to do it. I mean, I'm not saying every day, but you need to have your system in order to measure the impact, which is not, you know, the same for every organization. You the resources or time or whatever, you can decide that you will do it, or per the indicators, because it's relevant, you may decide that you will do that every 6 months, or that is more relevant for your organization to do it, or feasible, not to do once a year or every 3 months. So it's like a system that you will have, okay, in order to have all this learning process. Okay, and yeah, and we are speaking about this, about having this circle of learning for impact, from impact and for impact. Okay, so this is like the shift that this title of the class of this talk was about, this shift from proving impact to improving impact, and how do we do that? So here are some learnings from our specific research that we did with all this consortium on the social exchange research. So we interview social entrepreneurs mainly, but also impact investors and policymakers, and also some universities in order to understand how they measure impact, if they measure impact, and what are the tools they are using, what are the challenges, main challenges, and so on. So I will mention a few because there's a lot of insights, but I will share with you some, like IMM is strategic. It's not only reported, it's like really should be a pillar as a part of the organization, and transversal. It improves decisions and performance, but capacity is a problem. So we need more training and more resources, right? Because usually there are many cases where social entrepreneurs, they don't have the expertise, or they don't have the resources, or, you know, both. So it's really important to have this capacity and resources. Then, you know, this kind of rule that one size fits all tools don't work. So we saw that there's variety and diversity among the different tools, approaches, methodologies that are being used. There are like a couple that are mainly being used, like the theory of change, but yeah, then there are organizations that they do their own kind of framework. Technology is a important player, and with the time even more, and with AI and all of that. So use tech to simplify and scale. No, there are nowadays many platforms, many tools, tech tools, and now it's like making us easier to collect all this data, to analyze this data, to simplify. So yeah. And then, and most importantly, collaboration. You know, it's a key and it's important, and this is what we saw among the social entrepreneurs as well, right? The importance of being able to have the support of different actors from the ecosystem, from accelerators, incubators, of course, impact investors, but not only with the resources, with the like financial resources, but also with non-financial support. And from different actors of the ecosystem, and of course from the stakeholders. Okay. So yeah, we already said that it's a driver. It's not just reporting exercise. You need flexibility. This is also what social enterprises said. You know, many tailor their own tools and approaches, and they are like pivoting, changing the platforms that they are using, improving, making a lot of mistakes, but learning. And also, very important is to build an internal culture of the organization towards IMM. I mean, doesn't need to be like one person. It's fine that one person has maybe the expertise and they do it, but it's something that needs to be transversal and part of the culture. Like all the entire team needs to be involved in a sense and understand this culture, this learning process. Maybe to end by saying that measuring impact is not like a checklist that you need to, because in many ways and many organizations is today like that, and it's a pity because you are missing a lot of learnings that can be part of this culture of impact, and the impact can be multiplied if everyone is really on improving by collecting this data. Because some for instance, social entrepreneurs, they say, but we don't need to measure because we have impact in our DNA. We were born with a clear intention of impact. So that's it. I mean, we are making a change, and that's it. Yeah, but the problem is that, if you are not measuring and you don't have kind of evidence and analysis and knowledge and learnings from that, how can I tell that you are making an impact? No, if you don't measure, or if you cannot show, and if you cannot learn from that, it's difficult to state that. Okay, maybe now to open the floor to insights or whatever you want to comment or ask.
Thank you, Dalia. One takeaway for me has been that it's also important to see this as impact management and not just measurement, and also in general, when impact measurement is too much at the forefront, but seeing it as a management practice is also quite important, and there are many points related with that. Thank you for the presentation. I would like to open up for questions. Are there any questions or comments, insights that I'm turning to our participants that anyone wants to share?
Yeah, maybe, I don't know, but I'm curious to know if there are any specific challenges that you have as a social entrepreneur while measuring impact and managing the impact, or if you felt like I identify with any insight related to that learnings that we had in this kind of process. Do you measure impact? And, any insight on that side?
As our participants think, there is a question in the chat. Dalia, is about the technology tools. Like, are there tools that you recommend related with IMM that you can suggest maybe?
Yeah, so today there are many tools, and maybe I can add in the presentation like a list of tools, because I don't recall by heart, like maybe 60 decibels and impact tools. There are many rural senses. There are many now, and now many are building software for that. There's like no one standard to use. It's also a challenge because, for some social entrepreneurs, you need to use this specific platform that the investor wants you to use. At the same time, you are using another tool for your beneficiaries. So there's no like a standard thing. But there are many useful things, apart from Excel, let's say.
Yeah. There was also Sopact that we used for, there was a tool called Sopact that I know.
Sopact.
Yes, another comment saying that it will be great to get a list of the tools that you know. So like, if you, as you said, if you can add that to presentation, we are happy to share it with our participants.
Right.
Perfect. Thank you very much, Dalia. Like, we are also, we'll get a small break now before Elise's session. Thank you so much. And it's been very nice to have you with us, and thanks for your session. Thank you.
Thank you. Thank you. Thanks, everyone.
So now we will be having a short break, and then we will continue with really interesting session that focus on the indicators and KPIs part. We will have it by Elise Leclerc from ESSEC. And before that, we have like a 12-minute break, and we will come back at 45 and see you in just 12 minutes. Yes, welcome back, everyone. We have the last two sessions of today, and we will be finished around 5 p.m. Now our session is gonna focus on, the title of our session is Aiming for Impact Towards New KPIs for Transitioning Companies. And Elise Leclerc is with us. Elise Leclerc is Funding Director of Social and Environmental Impact Assessment Lab at ESSEC Business School. Welcome, Elise. It's great to have you here with us.
So do I start? Do I share my slides?
Yeah. Like,
okay.
you can just start directly, and then we can have in the last 10 minutes for room for Q&A.
Okay. Can you see my slides now?
Yes, we can. Can you also do it like full screen? Yeah.
Is it full screen now? I think that's the best I can do in
yes.
a PDF.
Yes,
Let me
it's
just
quite
check
clear.
here.
It's quite clear now.
Okay.
It was better before, like
It was better.
Yeah,
okay. Yeah. I tried something different. Read mode. I think that's the best. Is that better?
Yes, that's good.
Great. Well, hello everyone. So I'm Elise Leclerc, as Semi was saying. I'm co-founder and director of the Social and Environmental Impact Assessment Measurement Lab at ESSEC Business School in Paris, and we're part of the Social Exchange project as well. And today I'm going to take a bit of a step aside from everything you've heard about social entrepreneurship, because we're going to talk about a slightly different type of company, or kind of a hybrid type, whom we've labeled transitioning companies. And I'm going to dive down into the indicators, impact indicators that Dalia started introducing in terms of process theories of change, etc., to really look at these impact indicators as KPIs very specifically. So in a few words, what we do at our lab, it's a lab that's 7 years old, that we started at ESSEC Business School to answer a strong demand from social enterprises around impact measurement, which is slowly arriving in France, but which is coming from more international methodologies and approaches, mostly from the Anglo-Saxon world. And we're part of a chair in social innovation. So our approach, which is very similar and complementary with the approach that Dalia has just presented, is really focused on social innovation and grounded in social innovation. And we're part of a center on social and ecological innovation. And what we do is we work on mostly action research projects. So we work with a number of organizations on kind of 2 to 3 years long-term action research projects around impact measurement as a control, as a management control tool, which enables us through this work. We have about 15 organizations that we work with, charities, local authorities, private businesses, multinationals, so all the range, startups, social enterprises, social startups as well. Enables us to have scientific and grey literature publications. We also do some teaching, and we coach and support and train about 60 social entrepreneurs a year. So we also have that very strong social enterprise perspective. And we talk at events like this one. So very pleased to talk to you about this social exchange project that we've been working on with Dalia and Bose and Munich Business School. At the lab, we're working on social impact measurement, but obviously I'm not going to go over what Dalia has just presented because it was very thorough. Just to say that impact measurement is a new discipline as far as academia is concerned. It's mostly coming from practitioners, so all of you are probably very advanced, but academia is catching up as it's a new phenomenon. And so the graphs that you can see on the screen are actually researchers who've done systematic literature reviews. So they've counted the number of articles published around social impact measurement, social performance measurement. They call it different terms, social indicators, and you can see that there's been over the last 10 to 15 years an exponential increase in the numbers of articles, scientific articles written about social impact measurement. So it shows that it's not just a trend, not just a new buzzword and a new discipline, but it is something that is spreading rapidly, and that now most organizations are having to look into. Why? Well, because of the urgency for a just transition, and it's not going to go away. So whatever kind of different trends are happening around the world politically, the climate urgency and the rising inequalities are not going to go away. And that's why impact measurement is one way of trying to solve some of our wicked problems or grand challenges, as we call them in management literature. So based on this increase and this trend, what we've decided to do at ESSEC, we're a business school, and at the lab we've been working mostly with social enterprises. But lately, we have actually had more and more demand around impact measurement from multinationals and what we'd call transitioning organizations, which are classic companies, traditional companies, for profit, who have decided to have a bigger responsibility to society, which is the corporate social responsibility, CSR movement. And what we've seen in France and slowly in other countries, but I'd like to hear whether that's the same in your country, kind of blurred boundaries between these different organizations, social enterprises, native social enterprises, impact organizations, transitioning enterprises. And so we've mapped them, as you can see on the screen. So we've tried to look at all organizations with the kind of legal status on one side as for-profit, but also mainstream organizations. So they're for-profit, but they are financed first, as the EVPA or Impact Europe kind of categorization would label them. Within these mainstream organizations, the investors that we've already discussed, but mainstream investors, not impact investors, and then businesses, which we've labeled mainstream, finance first. And then you have a whole number of organizations that are moving towards impact organizations, that's how we've called them, with the whole finance here as impact funders, which are usually philanthropy, but also impact investors that Bose mentioned earlier, with the kind of SRI investors being a little bit in between. You also have on the left social enterprises, impact first or for impact, and these are both, you can see it's a bit small, non-profit organizations such as NGOs, charities, but also for-profit social enterprises such as covered by the social and solidarity economy and who are impact first, but who are still for-profit. This is the new status that has come with social innovation and the social and solidarity economy. And that's the organizations that at ESSEC, in the lab anyway, on impact measurement, we've mostly been working with. And that's also where most of the measurement literature, scientific but grey literature, is for usually written impact measurement for NGOs, charities, social enterprises, impact first. But we also have state public organizations, which are by definition for impact on society, so local authorities, state agencies, governments, etc. So these are also impact organizations. We include them in this category. And then in between the mainstream and the impact organizations, but still grounded in impact organizations in this categorization, what we've called transitioning enterprises, which are traditionally financed first, and so for profit, but who are changing and are trying to transform and to transition themselves in their business model. And for us, a mainstream company to meet that criterion needs to be involved in a collective process to have their CSR policy and their impact strategy validated by an external constituent or an external entity. So that would include B Corps, as there is it is a collective movement, and there is an external entity through the B Lab and the B Corp certification and other CSR labels. And you will see that in our research work, we have also been including the French legal framework, which is a Société à Mission, which exists in the States first as benefit corporations, in Italy as a Società Benefita, and which is starting in other countries as well, but which are collective external validation frameworks. And that's what we've called transitioning enterprises, because they're not natively social enterprises, but they are more and more talking about impact. And in all their literature documents, reports, etc., they are talking about impact. And we wanted to check for these transitioning companies how they measure their impact and what kind of impact measurement systems they have in place, whether it's the same as social enterprises or whether it's different. So that was the main goal for this research. I'm not going to go over the theory of change model again, because that's Dalia has done it very well. Just to explain that we have been doing this research using the theory of change model, which is very close to the logic model, the value chain from Clark as well. But what you might notice on the left-hand side is that in our version, because we ground our approach in social innovation, we actually start our theory of change thinking with the social need, which was what Dalia was calling the root cause of the problem. But that enables us to make sure that when organizations measure their impact, whether they're transitioning or social enterprises, that they always come back to whether their impact has actually answered a social need. And this is very important because when we're working with transitioning companies, because they don't necessarily have historically a social need in their strategy, because historically they're finance first, it can be difficult for them to formulate a strategy or a mission that will actually address a social need. And that's some of the findings from our research, is actually that in many cases, the impact measurement isn't necessarily the same, because it doesn't start from the same analysis and strategy around solving a root cause problem or a social need. And the social innovation, the definition is the answer to an unmet or partially unmet need that enables us to ground this approach in social innovation by starting with the social need. The rest you will know from what Dalia has explained. When we started looking at the definitions for impact in mainstream businesses, we discovered that not everybody who was talking about impact was understanding the same thing. So if you look at EFRAG, which is the European Financial Reporting Advisory Group, who started the Corporate Social Reporting Directive, so the CSRD, they define impact of a company as the effect it can have on the economy, the environment, and populations, including its effects on your human rights as a result of the activities of business relations of the company. And this, I'm emphasizing the effects on human rights, because that dimension is actually very specifically on paid staff stakeholders. So that's one stakeholder that's being highlighted in this definition. And if you look at the definition of social impact and social change in the social innovation field, then you see something quite different. We've used here kind of the academic definition around improvement in well-being, quality of life, life satisfaction, or the reduction in social needs, which is relating back to what I was saying earlier about using social need and reduction in social need as a basis to think of a theory of change or an impact strategy. So already we noticed that we have two different definitions based on two different fields, but actually both talking about impact, which we thought was quite interesting to dig into. And if you look at the OECD scope for measuring the social performance of firms, you can see that the OECD has actually thought of the social performance. So they're not talking about impact, they're talking about performance. So here you see that we have different terminologies as well, which are which could be interchangeable or not, depending on how you take the term itself. But what they consider a firm's performance in terms of social dimension is the level of well-being of the firm stakeholders. And you can see here that the firm stakeholders that they have highlighted are employees, so what was in the previous definition by EFRAG, but also consumers, so all the clients, local communities, and society as a whole. And this distinction is very important because in the previous definition by EFRAG is the idea that EFRAG is the body who came up with the CSRD. And the CSRD, one of the new areas of the CSRD is impact materiality. And impact materiality is actually the impact not only on employees, which is already covered by all the CSR reporting dimensions, but also the consumers and the local communities, which are the societal dimension, because they're not part of the organization, because they're not employees or employees of the contractors of the organization. And therefore, there are two new stakeholders. And so we've used the theory of change as a framework, the social innovation, looking at needs as a start and answering social needs. So that's the second theory that we've been using. And the third theory that Dalia already mentioned is the stakeholder theory, which enables us to have a more global vision of how organizations measure their impact. If you are familiar with the EU environmental footprint method, which is one approach to measure environmental impact, then you will know that when you measure environmental impact, it's very standardized. There's already lots of reporting standards that exist. They look at the organization in three ways: the organization's activities, the upstream activities, which are everything that enables the organization to create its products and services, whether it's a social enterprise or a mainstream or a transitioning enterprise. And then you have a downstream activities, which are everything related to distribution, sales, the clients, etc. And this is helpful, but it actually doesn't enable us to have a clear view on the social and the societal dimension, because it's still split into three different levels based on the production level. So what we've decided to do is look at not take an organization focus with the stages of the upstream organizational activities and downstream activities, but rather look at impact measurement of an organization through the stakeholder theory. And so the definition, any group or individual who can affect or is affected by the achievement of the organization's objectives. That's Edward Freeman from 1984. And just very briefly, because we're academics, so there's the little kind of theoretical background. But the idea of stakeholders was new. It's a word that didn't exist, and that was coined by Freeman in '84 as a reaction to Friedman, who was saying that the only group of people who can have demands regarding a company are its stockholders. I'm sure you won't learn anything in what is a stakeholder, because now that's very, very widely used. But it's useful to know that even when creating this approach of actually several groups of people who are affected by the company can have demands regarding the company, and there is an impact on these people. In his 1984 paper, Edward Freeman thought that this was in the benefit of it would be a financial benefit to the company to take into account all the stakeholders. So it wasn't an ethical approach of, well, you should, because ethically you should take into account your clients and the local communities affected by your organization. But it was actually instrumental in the way he was describing it, that it was actually a good way of making sure that you had less risk of financial issues by including all stakeholders in your organization. And based on this, we have come up with a framework, which I'm going to explain as briefly and simply as possible. But if not clear, you can obviously ask questions afterwards. We have split the organization through stakeholders as first internal stakeholders, everything that's internal to the organization, on the left, and that is both for social dimension in terms of measurement indicators. So we've looked at what do organizations measure, transitioning organizations, but also social enterprises, because that's whom we've been working with for years. So the internal stakeholders are all the people that are paid by the organization or by the organization's contractors. So everything that's human rights, quality of life at work, equality, gender equality at work, etc., inclusion, diversity, all these are internal stakeholders. So for instance, outputs, as Dalia explained very well, so I won't go over the difference between outputs and outcomes. I'm sure you all understand the difference now. You would have, for instance, a percentage of disabled staff that are over the compliance requirements, because obviously if you want to have a positive impact, compliance is just the minimum. So if you want to have positive impact, you want to go over the minimum compliance requirements by the law, if there is a law for a minimum percentage of disabled staff in your organizations, as there is in France, for instance, where it needs to be 6% of staff for large organizations need to be disabled, otherwise the organization will kind of pay fines, etc. That's one way of encouraging organizations to hire, to be more open and more inclusive in their recruitment process. And then internal outcomes or impact, for instance, could be, well, the fact that there is, through a number of diversity and inclusion policies, improved feeling of inclusion by disabled staff. That would be an outcome or an impact, depending on how you measure it, with all the technical elements that Dalia shared. And the environmental dimension can also be the environmental impact of the organization. So can be scope 1 or 2, which is based on the organization's buildings and activity, core, CO2 emissions, and then the impacts will be the decrease, for instance, of CO2 emissions proportional to the same area, obviously, compared to the previous year. And so that's actually that's the smallest part in terms of number of people affected, because it's only paid staff and only the internal dimension. And the societal dimension will be everything that's external stakeholders. And so, as you saw in the OECD definition, for instance, the social stakeholders will be the customers, the clients, and the communities. And that's what IFRAC calls impact materiality. And you will have in organizations impact measurement processes, for instance, as an output, the number of clients. If you're an energy company, the number of clients who have used energy-saving products. That's just an output. Just the fact that they have used it doesn't mean it's had a positive impact on them. The outcomes or impacts would be for these customers or communities that they've actually had an increase in economic well-being through the reduction in energy bills for the clients. And if you take the same type of organization, they will have an environmental impact through what they sell. So it could be the number of energy products sold. If there is a decrease in the or a reduction in CO2 emissions through this selling of articles, which will be as an outcome then a comparable decrease in the consumption of the clients through the energy product. And that will be the environmental indicator of the same service or product around energy. So we have taken this framework and we have analyzed a number of reports of transitioning organizations, which I'm going to share with you. But before that, what we know, and which you'll all be familiar with, is what Dalia was talking about just before, is that social impact measurement or outcome measurement will be concerned with this box here. And that's what most social enterprises in the social and solidarity economy, charities, NGOs, etc., have been working on for the last 15 years. So based on that, we looked at what transitioning organizations are measuring. And what we found is that when we analyzed 30 B Corp reports, so you can see here the number of indicators in the first column, we've counted the number of indicators in these reports that are in the public domain, very different sectors and different countries as well, because we covered the social exchange countries as much as possible. And what we've also counted is the companies, so the number of companies who are measuring these types of outputs. And so for 30 B Corp reports, what we found is that the what is least measured, as you can see here, is actually the social impact or the societal impact on external stakeholders with the least indicators. But even that, if we looked at actually how many companies do these 36 indicators concern, because you can see here you also have a few, well, not many anyway, you have only 33 environmental outputs. It's only 11 companies that measure these 36 indicators. And with the most measured type of indicator being the societal environmental impact with 27, with close to coming after is the internal, so staff outcomes. And that's usually what companies already measure in their CSR, so mainstream companies in their CSR reporting, they are asked on environmental impacts here and internal kind of staff social impact on their internal stakeholders. And that includes their contractors, because it's all upstream. And it's all paid staffs, if you look at it in terms of stakeholders. So we thought that was very interesting because the difference is striking. And that was over different countries. So we narrowed down onto the French Société à Mission, which is a law which is very constraining and which involves organizations changing their kind of state. Not really, it has a status dimension, but they add what we call equality to their legal status. So they stay for profit, etc. But they actually have to change their overall strategy as a societal mission. And so clearly with having a societal strategy, and that's why they're called Société à Mission, they have a societal mission. And sorry, I'm not managing to change my slide anymore. Here we go. And so when we analyzed 33 reports that were online, the difference was even stronger with the most measured indicator being the social kind of internal social indicator on staff, and mostly output indicators instead of outcomes. So you could see also the difference with B Corp, where the B Corp impact measurement is leading compared to the Société à Mission, very much on social, but internal. And in terms of social impact on society, very, very few organizations are yet, it's a new law, it dates back from 2019, so it's obviously a lot younger than the B Corp, but we thought it was very interesting to be able to see how different the impact measurement practices are between organizations which are actually using a similar terminology, and where in some countries, in France anyway, we really see some blurring and some debates in between transitioning organizations, who are in France called impact organizations, and then the social and solidarity economy. And we thought that actually the impact measurement and management control systems were a good way of understanding what organizations were measuring. And for us, in terms of recommendations, what does it mean? Bearing in mind that we have, as I said, more and more mainstream organizations wanting to have a better impact on society, especially since the CSRD, despite the omnibus, there is still a very strong drive to better measure and manage their impact on society as transitioning organizations. What can we do? Well, first, this framework for us is very helpful, and we're using it on a daily basis when we work with organizations to understand what they measure and tell them, well, look, here you're not actually measuring any societal impact. So this is how you could start measuring them and therefore monitoring them. We talk about frugal impact measurement, and Dalia described it very well in terms of something that should be as simple as possible to be a management tool and an improvement tool, and that's for all organizations, not just for social enterprises, but actually if we want to meet these grand challenges that we have and towards the just transition, then mainstream organizations also have to be able to start measuring their impact on society. And then two other recommendations that we've been working on as well is actually the harmonization of methodologies to support companies. And we're working at French level on a quality certification for impact measurement. There are a number of tools, and as was said previously, you will receive a list because there's a lot of methodologies. Researchers have counted 98 methodologies and counting, because that was in 2021, around impact measurements, with the most used methodology being the social return on investment methodology, which is now called the social value, which is harmonized and supervised by Social Value International. So that's the most used in the world as a methodology, and that's what researchers say in terms of counting the number of reports that have come out on one single methodology. So that's interesting, but there's so many more methodologies that can be used, but the harmonization could only help enterprises and organizations what we're finding, because it's so complex. And potentially also the harmonization of some sectorial. So there was in the chat earlier somebody asking for a tool that would be most appropriate to their sector in terms of an approach or a tool. And at our level, we've been working on sectorial indicators frameworks. So when you say indicators, you say quantitative data, because indicators are based on quantitative data, even if it's subjective and based on surveys, but there is still a quantification involved in an indicator. But on some sectorial indicators that come from organizations themselves, mostly social enterprises and transitioning enterprises, but that are societal impact indicators that enable to measure whether an organization in a specific sector answers a social need. So we've done one on inclusive mobility. We're working on disability indicators as well, indicators of tackling disability and inclusion for disabled people in society all over, on aging as well, and well-being or aging well, on incubation of projects. So that's for us another potential way of moving forwards collectively, is actually to have a harmonized set of indicators that can help us towards kind of systemic impact, if we have indicators that all organizations in one sector or around one theme are measuring. So that would be our three recommendations kind of for us to move forward. And I'll stop there because I can see my time has run out. If you have any questions, please go ahead.
Thank you, Elise. It was a great presentation with very good insights. I enjoyed it very much.
Thank you. I'll stop sharing just so I can see.
Yeah, for the questions.
Again,
sure.
yeah.
Yes, the room is for questions. Any questions you would like to share, either via chat or you can also speak up. We have around 7 minutes. Maybe as people think, I can ask in the meantime. Like I was surprised with the data, 98 methodologies. I mean, obviously the main ones I know well, but like I was also curious, like how do you see the advantages, disadvantages of having this number, and also like is there a resource, for instance, let's say that guides you in a particular use case? For instance, you can use this methodology, or in a given industry you can use this methodology. Is there a resource that also guides you in kind of to particular methodology?
So I don't know a resource that guides you in all of them. I think nobody has actually, aside from the researcher who counted the 98 and who had to check what they were and that they were indeed, and in there you actually find some more output measurement methodologies, not necessarily impact. There isn't a resource, and I think, I'm not sure it would actually be very helpful. What we see is that for organizations to actually adopt impact measurement, it has to be very simple because it's not their job. And for it to be simple, as soon as you're going into one specific, very technical methodology, then it becomes, you have to ask an expert. And for having been trained on the SRI methodology, it's actually, you can't do it yourself the first time. You have to hire someone. And that's the issue with the social enterprise and startups or small companies who don't have a lot of budget. They can't hire an expert to train them on the methodology. And so my advice, and we've actually written a book, but it's in French, on impact measurement, which we called Frugal Impact Measurement, for organization to have it as a management system. Then it needs to be as simple as possible. A simple theory of change is the base. 3 impact indicators, 4, 5 maximum, and kind of an annual data collection on these impact indicators. But as impact data doesn't already exist usually, because it's very hard to find impact data that's public. So most of the time you have to do surveys because you don't know what's changed for people in their well-being unless you ask them, if that's the kind of the definition for impact that you're using. And so I think just using the very simple methodologies where the EU has shared. There's the European Commission. It's actually based on the SRI without the monetization dimension. So the EU kind of framework on measuring social impact is very good, very simple, and not worrying too much about doing it yourself. I think that would be my recommendation, because it shouldn't be only for experts. All organizations should be able to measure their impact with just one or two indicators. So, but yeah.
That's a great point. And it's also in parallel with the earlier panel today, like we had also startups and intermediaries in that panel, which also made a similar emphasis about keeping it simple, especially for early stage. Perfect. Questions? Any other questions that our participants want to share? Yes, we have one in the chat. Elise, do you see it?
Yeah. Age, you mean ageism, in terms of taking into account either young people or elderly or older staff? Yes. So, I mean, I don't know about the whole of Europe and all the countries, but in France, they're just looking into a law, because also it's going with pension negotiations on raising the age, the pension age, but they're actually looking into, or they've been looking into a number of measures to encourage organizations to hire older people looking for work, because 1/3 of people over 55, I think, are unemployed in France. So it's like a massive issue. And there are specific things for young people, but actually not for organizations to hire young people, because they can do that more because the wages are lower. So financially, there is a business model to hire younger people rather than for older people. So I know in France it's starting to arrive. But in the US, indeed, I'm not familiar, and I don't know in other countries in Europe and worldwide. Maybe if there's other people, there's a lot of people from Turkey, obviously. I don't know if you have that kind of a DEI, diversity and inclusion policies, equality and inclusion in Turkey.
I don't know of a local example, but in general, global frameworks are kind of adapted frequently, especially in the private sector context. But a local one, I personally don't know, but maybe there are some more suggestions in the chat. We are also about the end of time. Thank you very much, Alice. It has been a great session and very informative. And
thank you. I just see one question. Sorry if I can answer in 1 minute. So I think I have 1 minute left.
I totally missed that. That would be great.
No problem. Just on monetization, there are different monetization methodologies. You have the cost avoided, which are mostly based on the economics approaches or cost benefit analysis, also based on economics approaches from one end of the spectrum, and then at the other end of the spectrum, more from the social innovation field, you have social return on investment, which is a lot more based on social innovation and the non-profit work and explaining what value has been created. And then the reliability of the data can be, I think is a long discussion on what data is reliable or not reliable. And it will depend on what your perspective is on, what is good data or not. So I guess we won't have time to get into any detail, but I know we particularly like the SRI, very social innovation grounded and based on stakeholder setting the value approach. I'll stop there, Simi, sorry.
Thank you very much for this comprehensive answer, and sorry that I missed the question. I saw it afterwards. Thank you, Burcu, for the question. Yeah, thanks, Alice, for this session. It was great to have you with us today. So final session, and also it's a launch of a handbook that brings together the key results of social exchange program and research, actually. And the handbook, like the first edition of the handbook, will be launched here by Merve Okutan and Cecil Ney from Impact Hub. Hello, Merve, and Cecil is also here. It's great to have you here. I will call you colleagues, as we are part of the same network and also good friends. Yes, we will be the final session of today, and it will wrap up different dimensions of the social exchange research. So I would like to give the word to you for the handbook.
Okay, thank you so much. And thank you, Cecile, for being my emotional and technical support in this meeting. Hi, everyone. Merhaba. I see a lot of Turkish names here. So I'm so sorry I couldn't join you in Ankara yesterday and also like the beginning of the sessions today. Because we are in Istanbul hosting 15 women entrepreneurs from all around the world. And I've been busy giving them a city tour and also joining a conference with them and so on and so forth. So I'll quickly introduce ourselves. So Cecile is the Impact Measurement and Management Lead at Impact Hub Global. And I'm actually an accelerator manager at Impact Hub, but I do a lot of things, right? So I've been in the social entrepreneurship, social innovation sector for the last 10 years. I work with international organizations at the moment, like Impact Hub, Ashoka, Wikimedia Foundation, and so on. And I do a little bit of writing that I enjoy a lot. And when the idea of this handbook came about, I was so excited because I support entrepreneurs and I'm interested in writing new things. So I did the writing part of it, and Cecile helped me a lot with her expertise. So what we want to do today is to show you the first version of the handbook. I guess you already heard about the social exchange project a lot, and you know what the project is all about. We have amazing partners who conducted very valuable research with different entrepreneur support organizations as well as entrepreneurs themselves. So what we did is basically we put together all that information and we created a handbook that's hopefully useful for the entrepreneurs themselves. So the goal of the handbook is to give very practical advice and tools to entrepreneurs, social entrepreneurs, and the people who try to support them. So of course we didn't want to reinvent the wheel. There are already a lot of resources out there talking about impact measurement. We just want to give you the most recent trends, so what your peers are using, and what has been found most useful by other entrepreneurs. So please have that critical eye because I'm gonna show you the first draft in a minute, and then we're gonna ask for your feedback. So bear with us, although we have very limited time. Yes. I think you can see my screen. So as you can see here, the handbook is like very clearly structured. First, it talks about the key concepts and frameworks in the impact measurement and management field. So things like outputs, outcome, impact, what all these mean. And then we talk about how entrepreneurs are currently leveraging impact measurement and management for stakeholder engagement. Here we know an important issue is access to capital, especially with funding shrinking all around the world, with investors losing interest in social issues. It has been a real problem. And like since I entered this sector, this conversation never ended. So we always say a good impact measurement can impact your partnerships, can impact your investment readiness, and so on. So in the handbook, we had an opportunity to actually discuss this at depth and like give some real life examples. So I want to quickly show you the handbook. I'm gonna skip the introductory parts because we don't have time. But I would like to share the key concepts. So we know anyone can find them on internet. We know there are other tools, but just to be on the same page about some of the definitions, we have identified input, activity, output, outcome, impact, attribution and contribution, counterfactual, deadweight, additionality, indicators, like all of these definitions. And we try to share an example, a very practical real life example about all of these terms, so that even someone who is newly entering the sector or newly founding a social enterprise can have an idea of how to do this by just going through the handbook. And then we talk about the frameworks. What we try to do here is like coming out of the research, we already identified some frameworks being more liked by the practitioners on the field. So here we actually listed them according to popularity. So theory of change is obviously the most popular, it's the most liked by the entrepreneurs that we talked to. Then another interesting, I think, framework was the Sustainable Development Goals. So using that framework as a way of organizing your impact measurement and management goals. Another was the B Impact Assessment, which is created by B Lab as part of their B Corp certification process. And then the social return on investment model. Of course, all these models serve to different needs, but we're hoping like having all these models on one page is going to help people make up their mind when they're trying to start their IMM practice. And then we really dived into the practical part, right? So like how to set indicators, which stage your IMM maturity is, and according to your sector, how can you set indicators? How do perfect indicators look like in others' cases? And then we talk about how can you leverage this data for different audiences, different stakeholders. And here we try to share as many real life examples as possible. Obviously, the social enterprises that we talk to, we have to keep them anonymous, but I shared their country of origin in case it helps you understand the culture of that social enterprise. And then we talk about how it affects funding. I know this is a very plain summary of the handbook. I wish we had more time, as I said, but I would like to receive some feedback. So Cecile, if you can just share in the chat the Miro board. You can also think about all the other impact measurement handbooks you've seen so far, because I know you haven't spent much time on this one. But we want to ask you, what is useful in this handbook? Like from this very short presentation, what seemed interesting to you? Or you can also share with us, like if you've seen other handbooks in the past and you found something specifically useful. And then what is missing, or what would be an amazing addition, and what could be better in this handbook. I know you haven't seen it a lot, but it would be great if you can contribute here. And you can also contribute in Turkish, because luckily I'm a Turkish speaker, so I can quickly summarize in English for the rest of the audience. I see a lot of arrows. You can directly
Great.
type in the boxes. Or you can grab a post-it and type there too. Kind of. Me manipulating the feedback.
Is there a timing, approximately expected timing for the launch of the handbook, and where it will be shared? Like just the question for the audience.
Yeah, I think end of July is a deadline for us.
Mhm.
So hopefully latest by August, you're gonna see it in a nice design too.
That's great news.
Yeah, you just saw my version, which is very plain and boring and white. But
Yeah,
hopefully,
that's the first draft, basically.
yes.
Of course, of course.
Thank you. So we have a resource suggestion. Yeah, listening to technological tools, this is like one of the things that I thought about. It can be interesting.
I think it's also good for the social enterprise support organizations, like because it's also a topic that we work a lot with social enterprises and try to support them. And especially like indicator development part for me was an area that both us and them feel a need.
Yeah, actually, from time to time in the handbook, there are like small notes for the entrepreneur support organizations. You can benefit from this in that sense. Yeah, it's gonna be a definitely valuable addition. Years ago, maybe you remember, Seme, together with my team at Ashoka, we translated the social reporting standards to Turkish because at that time, as an entrepreneur support organization, we were having a very hard time sending, just one toolbox in Turkish. And like, then I said, okay, I'm gonna translate this. Then we're gonna have this one resource that we can share. So hopefully this handbook will also be something that entrepreneur support organizations share with entrepreneurs, or they can, they can pick whatever is useful in their entrepreneur's case and present it to them. I'm hoping it's gonna be useful.
Yeah, definitely.
So key concepts were also found useful. That's good to know.
And I think Cecil also shared the link for the document as well. I mean, for feedbacks and comments later also could be shared additional feedbacks. I will definitely take a closer look.
Yes, please do so. And I'm gonna share my email as well as an anonymous feedback form for future feedback. My only request is please do not share the handbook widely yet. Just use it for feedback. And hopefully in August you can share it with everyone. We're gonna have a nicer looking version by then.
That sounds great. Marin also wrote like that. After reviewing in more detail, more comments could be added using the same link. I see that already more and more comments are coming, but also it's possible after the session as well.
Yes, this is great. Semi, can you remind me, do I have 20 minutes or 25? Wait, I have 20 minutes, so I have to finish soon.
You have 5 more minutes, but yeah.
Okay.
Feel free to add more.
Okay.
1 or 2 more minutes.
Okay, then let me quickly summarize the feedback also for all of us to hear. So key concepts, language for audience part were found useful. I see 2 resource suggestions. Thanks so much for that. And what could be better? Actually, I should delete my own exemplary input here. What could be better? I can list some of technological tools. I think we need to check with the partners if that's okay. And maybe we can share tips of failures, like tips to avoid certain failures. and a list of organizations and methodologies. Yes, and I haven't shared this with you, but we will also have an annex, and there we are going to have a lot of practical tools, you know, the tools that we came across while doing this research. We have some Miro boards, for instance, that you can just like go and copy for your organization. We have some cool videos, some other handbooks. That will also be that. So hopefully all of them at one place is going to be useful. So this is my final thing that I want to share. So you have my email if you want to have a deeper conversation or if you have more feedback. Or if you want to do it anonymously, you can scan the QR code that's on the screen right now. That's going to take you to a form, which you can fill in anonymously, hopefully. Yes.
Thank you. Thank you. Thank you, Merve and Cecile. I mean, we will also definitely share the presentation. So, and also the link along with the presentation after
Yes.
the event, so everyone can add more comments and feedback when they get chance to take a closer look.
Yes, the only note I will share is we can also share this after the event. Like we're gonna have 10 days to accept feedback because then I have to embed the feedback in the text and then we are gonna reach at the final version. Yes, thank you so much. Teşekkürler for having us. Hopefully we are going to have a great handbook very soon. So thanks.
Biz teşekkür
Thank you.
ederiz. Faydalı
Thank you.
olacak. Üzerinde okuyacağımız bir doküman olması çok faydalı oldu. Biz teşekkür ederiz.
Harika. Thank you very much. So for the ones who don't know Turkish, there was also a comment saying that it's very valuable for entrepreneurs and it's kind of simplifies the topic. In that sense, it was appreciated.
Great.
Thank you, Merve and Cecile, to do this nice closing session. It was great to have you with us. And so, like, we just ask for your final 5 minutes. I'm like, there is this about today's session. Like for us, it's very important to hear your feedback. Like we have a very short feedback form that we will show now, and it's just very important your opinion for us for development purposes and also to help us for project reporting purposes. We would really appreciate if you can help us with feedback, and that will take maximum 5 minutes. You can find the link for the feedback form in the chat. Berçem, can we also share screen? Yeah. Just 5 minutes will be more than enough, and we really appreciate the input there. Thank you very much, Damla. It's great to hear this feedback. That was exactly the aim of the handbook. Yes, you already started giving answers. Thank you very much for that. Like you will see 6 questions, and like we can you can answer on your own pace, and it will take you maximum 5 minutes. Thank you for the answers. And all today's material, just final pieces of information I will give in the meantime while you are answering. All the materials will be shared with registered participants, either via website or Zoom. Like we will be sharing with you the materials, and there will be some updates to few presentations. Once we have that, we will be sharing with your email addresses, and feel free to write us like if you need any clarification or for like any question about today's content. You can always reach out to us. Yeah, final comments are coming. I'm just giving one more minute, and then I will end it. You can also, like, if you need more time, you can continue on the link. You can finish it also after closing. We will all the answers will be saved in the portal in any case. We can also stop sharing, Berçem. I think that's enough for now. Yeah, thank you. Yes, thank you for your time and participation today. You can, as I said, let us know about your comments, questions, and anything about today's session. And yeah, thank you, and we look forward to seeing you soon in another opportunity.